What's up, everybody? Welcome to the Next Level Live. My name is Frank Eufemia. Thank you, corporate, for having me on. This is always an honor to get to share with y'all. So they've tasked me with covering mortgage protection for you guys. And, to be honest with you, it's what I've taught at Family First Life since pretty much day one. And I used to get frustrated going, you know what, can I teach something else? And then I realized absolutely how important it is to understand mortgage protection, how it works, how you can really help and serve families when you get it. That, you know what, I need to stop being so selfish and just do what they ask me to do. So that being said, we're going to cover the 5 different ways you can close a mortgage protection appointment. Okay. And you can use these. You don't have to use these. I can tell you, I ran strictly mortgage for a lot of years, and the reason I was so successful is I would replace a lot of policies because the agent that went in the home before me didn't solve a problem. All they did was put a Band-Aid on it. And what I mean by that is they would sell 10 months worth of payments, 12 months worth of payments, 24 months worth of payments, and then nothing else. And I would go simply, well, what happens after that 12 months? They're still back in the same situation that they were prior to meeting with you. So my goal when I sat down and dissected this of what I wanted to do was to absolutely solve the problem, give the folks a plan to put in place so that when they passed, their loved ones knew what was going to happen. So here are the 5. The first one is paying off a mortgage, okay? Completely. Pay it off so you don't have a mortgage payment minus the taxes and the insurance when the person that owns the property dies. You can incorporate cash back with that. In fact, I'd encourage you to incorporate the cashback option with that, where you take the cash you receive back after 25 years and you pay the house off 5 years early. You save 5 years worth of interest, which is pretty easy to sell, to be quite honest with you. When you can show somebody a way that they can protect their mortgage if they pass away, if they become critically ill, chronically ill, or terminally ill, they also get paid. And then if none of that happens, they get all that money back and they can pay their house off early, save 60 months worth of payments at 38, 40, 50, 60 grand in interest. It's a no-brainer. So paying off the whole mortgage, you can incorporate the cashback option to pay off the mortgage early. There's videos on that out there. If you have any questions, reach out to me. I'll explain it to you. Partial payoff. Maybe have a husband and a wife, both make decent money. They could afford some part of the mortgage if the spouse dies, but couldn't afford the whole thing. Or if the parent lives with a child, whatever the case may be. You can also incorporate cashback in this option. I would, just because it makes sense. Anytime you can give your client money back at the end of the term and they don't feel like they're just wasting money, to me, it's a no-brainer. Now, this one probably won't be big enough to get enough cash back to pay the house off early, but if you put half on the wife, half on the husband, and then you combine the cash, possibly, you'd have to run the numbers, and all you need to do is run an amortization schedule. You need to know the term of the mortgage, the interest rate, plug it into a calculator. It'll tell you exactly how much they owe at the end of 1 year, 10 years, 15, 20, 25, and all the way up to 29 years. So you take the balance of what's going to be left and see if the cashback equals that balance. If it does, they can pay the house off. So you got, first one is pay off completely. Second one is partial payoff. The third one is equity protection. Okay. This is where most agents go in and they go, we're going to give you 12 months worth of mortgage payments. That's all they say. And the challenge is, okay, that's great. However, what happens after the 12 months? Now, when I go in there, I go, all right, Mrs. Jones, Mr. Jones, we're going to give you our equity protection program. So essentially when you guys pass or you pass, your son or your daughter, your cousin, niece, nephew, they'll have 16, 18 months to cover the mortgage. They'll have enough money to get the house cleaned up, cleaned out, listed, and sold so that they get the equity. It's essentially, when you have equity in your home, it's like having cash in the bank. Now, I don't know many people that would have a bunch of cash in the bank and not care what happened to it when they passed. All of you that have it, in fact, all of you that have an account have a beneficiary on that account. To whereas if something happens to you, someone could come in and take the money that was in that account. Well, that's what equity in your home is. So why wouldn't you have a plan to protect that money? Because a lot of times our mortgage with a lot of folks is the biggest investment they'll have. So why wouldn't you protect that investment? Especially the older you get, the less you owe, the more equity you have. So equity protection essentially is 12 months payment protection, but we're not presenting it as that because all that does is cover the payments. But when I tell them we're going to give them equity protection to give them enough money to get the house cleaned out, listed and sold, make the mortgage payment, and if they need to do any minor repairs to get it to pass inspection, they'll have enough money to do so. Number 4, transfer of assets plan. I have no spouse, but I have a child. The child wants to move into my house when I die. They're going to take over. I'm not worried about paying it off. They're an adult. They make okay money. They're not rich. They're not poor. But I'd like to make sure that they have a really good chance and a good opportunity to get into the house without having to put a ton of money out of their pocket. Because essentially with a loan, if I own a house and then I pass and I'm giving it to my son and he wants that house, the bank, if I have it listed to where he's first next to Kim, or he's my executor of my estate, or he's on my will as he's getting my properties, the bank has to give him the house for what I owed on it before I died. So the house could be worth $600,000. And if I owe 140, essentially my son's buying the house back from the bank at 140 grand. Now he has to qualify for a new loan, unless of course he's VA and his dad is VA, then you can assume a loan, but there's a lot that goes into that. So let's just say it's a conventional loan. You have to qualify for a loan just like a purchase. They're going to look at your credit. They're going to look at your debt to income ratio. They're going to look at your reserves. They're going to look at how much excess cash you have left over at the end of the month. They call it disposable income, and they're going to qualify you. Now, the more equity, the easier it is to qualify. The more cash he has in the bank, the easier it is for him to qualify. So with the equity protection plans, I try to do minimally 20 to 25 grand, at least. If I can do more, if they can afford more, I'll do more. Because the more money he has in his account and cash on hand, the easier it is for him to get the loan. He's going to have to pay down payment if the equity is tight. If there's a lot of equity, then he won't have to put much cash down as a down payment, but he'll have to cover transfer taxes and closing costs. And he'll have to cover 6 months worth of escrows typically. So 7, 8, 9, 10, 12 grand. And then again, if he's never had a house and he's going to get into an FHA loan, there's an FHA appraiser that comes out. Let's just say the hot water heater's bad. They require him to replace it. Some of the electrical sockets need to be replaced because they're not up to code. FHA absolutely does that. So let's just say that's $3,000 worth of work that has to get done for the house to go, for the appraiser to release it, or the inspector to release it and say, yes, this is FHA worthy. You can release the funds. Well, if I don't get it fixed, I can't get an FHA loan. And if my credit's not great and I don't have a ton of money to put down, not many loans I'm qualifying for other than FHA. So I'm giving him enough money to make sure that when he takes over this property, he has enough money to cover the transfer taxes and the closing costs. He has enough money to fix anything minor that FHA inspector, if he goes that route, decides needs to be fixed. And then if it's extra, he can put it down towards the mortgage and make his mortgage payment a little bit lower. That's a transfer and assets plan. That's number 4. And then number 5 is your reverse mortgage protection plan. Okay. Now, and I'm probably gonna have to redo this and say there's going to be 6, because I'm getting a lot of people telling me they're getting a lot of mortgage mailers back for reverse mortgages. So I'll say if it's a reverse mortgage, it's a completely different sale. It's not a mortgage protection. It's a reverse mortgage protection plan. But this is a reverse mortgage plan as far as protection goes, meaning you're sitting with someone that's in their, late 50s, 60s, 70s, husband and a wife, and the house is worth 200 grand. The loan amount is 130. Well, depending on your age, the closer you are to 60, you need 50% loan to value to qualify for a reverse mortgage. So that means if the house is worth 200, 100,000 is the max the loan can be. That's the loan to value. But in this scenario, it's 130. The house is worth 200. So if Tom dies, Mary could reverse the mortgage if she had $30,000 to put down on the loan. That's where we come into play. So we go, Tom, Mary, what do you all know about reverse mortgages? And they usually say, I don't know much, or they stink, or I know how they work. Whatever they say, I'm gonna ask them to tell me what they mean. If they go, I don't know, I'll explain it to them. I'll say, you don't know anything? They'll go, no, I mean, I heard some stuff. What did you hear? Because I want them to tell me first. If they say they're terrible, I go, why do you say that? What did you hear? I want to hear who they were talking to. I mean, let's face it. A lot of folks like to give financial advice that have no idea what they're talking about. And that's typically the case with the reverse mortgages. Oh, my friend Nina, she lost her house because she had a reverse mortgage. First of all, that's not true. It's absolutely not true. You can't lose a house due to a reverse mortgage. Now, there are rules. So like if I'm 65 and I reverse my mortgage, I cannot have anybody living in that house that's under the age of 65 or 62. That's the rules. Or I can't reverse this mortgage, move in with my son, and then rent my house out. I'm not allowed to do that. So if you get caught doing that in a reverse mortgage, the bank will make you amateurize the loan back into a 20 or 30 year. If you get caught doing it. And then they give you some time. And I guess if you don't do that, that's when they have the right to default the loan, right, and take the house. But it's not something they're ready to just come and take your house. So you have to understand how they work. Do some research. Understand how they work so that when your client says something to you, you can speak intelligently on it. They're made to take a course. They have to take a course if they want to reverse the mortgage to where they're educated on how those processes work. So we're going to Tom and Mary. This is a great plan. There's two ways to eliminate a mortgage payment. You can pay the house off or you can reverse the mortgage. Tom, full coverage on 130 grand at 78 years old is $684 a month. Or 30,000 is going to be $202 a month. Which one's more manageable? Both of them do the same thing. And here's the cool thing, Tom. When Mary dies, your kids will have 12 months to figure out what they're going to do with the property. They don't have to worry about the payment. They don't have to worry about anything. So they have 12. It has a built-in equity protection plan or transfer of assets plan already built in. They have 12 months to get the house financed into their name, or they have 12 months to get the house cleaned up, cleaned out, listed, and sold. That's your 5 mortgage protection clauses on a regular mortgage. Now we get into the reverse mortgage. If someone has a reverse mortgage already and they fill out a form, you go, this is very simple, Mary. When you die, your kids have 12 months to figure out what they're going to do. If the house sits longer than 12 months, they have to start making payments. So we're going to put in place, again, an equity protection because they're going to sell the house. Enough time for them to get the house cleaned up, cleaned out, listed, and sold as long as it takes. Or if Tom's got kids or Mary's got kids that are going to move into the house, I go, perfect, this is going to be a transfer of assets plan. Now, because y'all have a reverse mortgage, Tom, they're going to have to refinance the house, essentially purchase it back from the bank at what you owe. And they're going to have to cover transfer taxes and closing costs. And if they're going to do any type of FHA loan, they have to do an inspection. So there may be some things they have to fix. So we're going to put a transfer of assets plan in place so that when you die, they'll have enough money to cover the transfer taxes, closing costs, and if anything needs to get it fixed so they can finance the house into their name. All of those scenarios, we solve the problem. And that's all mortgage protection is. Honestly, guys, that's all selling life insurance is. Our job is to find the problem, give them a solution that they can afford, and make sure they qualify and make sure they like you. I mean, it's really not that complicated. Now, when you're starting, if you're brand new, trust me, I was brand new once. And this is the reason that I focused on figuring out how to make the value in mortgage protection. Because I would go into homes and people wouldn't buy. And it would make sense to me why they should, but I couldn't explain it in a way they understood it to where they said, you know what? That is worth that price. It's worth $204 a month for me to get a reverse mortgage protection plan so that when I die, Mary can pay the loan down, reverse the mortgage, and live here payment free. It's worth the equity protection. It's worth paying off the entire amount, getting my cash back, paying my house off early. Guys, mortgage protection is really simple if you understand it. Practice it on your friends, family, present it, educate yourself, speak intelligently, care about your clients, tell them what they need to hear, and everything else will take care of itself. Thanks for having me, guys. Appreciate you.
Hey guys, Paul McClain here, and first of all, I want to just say thank you to Sean, Mike, and Family First Life, the whole corporate office, for what you do every single week to really kind of get, reach out and get these concepts packaged and delivered to the sales force. I know for myself, going back 15 years now, which is crazy to even say I've been doing this 15 years. I've almost been doing this longer than I've not been doing it, but this is the stuff that served me well and still serves me today. Last week, I was sitting there taking notes, listening to Nina and Marissa as they went through the recruiting, social media, and so it's such a blessed position to be in an environment and in a company that every week you got what's needed to develop, to grow, and to take it to the next level. My desire today for everybody watching the Next Level Live is to help you increase your final expense. So if you're out there sitting with clients and maybe it's off of an internet lead, maybe it's off a final expense direct mail lead, maybe it's a Facebook client, whatever lead type it is irrelevant. The reality is a lot of clients that you're sitting with, they're going to have a need to be served by final expense. And how do you best do that? And that's what I really want to cover today, is to go through some of these closes, some of these scenarios and situations that you'll sit with, and how do you best handle them, right? Because over the last, 15 years, I've had, I guess thousands of clients that I've served with final expense. So I've really learned what not to do. I've messed it up for such a long period of time where I sat in great frustration and said, dude, I gotta figure out how to help this client that says they've already got it through the funeral. I gotta help this client that keeps saying they gotta talk to their kids. Man, how do I finally help that client? Because I cannot close that. And then a lot of times of frustration, not being excited where I was at, I was able to reach out, take a look at some trainings, reflect on my business, reflect on how I was saying it, record myself, develop, grow, and figure out how to go out there and best approach those. And that's what we want to cover today. And so we're going to first start with this. I believe that if you're not at the level that you want to be with final expense, helping families, serving clients, maybe your close ratio is lower than you want it to be. I want to first address the root, and then I want to go through, some of the symptoms and the scenarios like we just addressed. The root, though, is, do you have enough leads to call? Like, do you have enough families to call? So if you're like, dude, I just can't get it, man. I'm trying to get better and I just feel like I'm missing something. Do you have enough shots? Because when you don't, the pressure is on, right? It's kind of like if I'm going to go play basketball, man, you say, dude, I'm going to give you financial freedom if you make 3 shots. My question is like, well, dude, how many shots I got, bro? If you say 3, I'm pretty discouraged, man. Like, dude, I ain't that good. I don't know if I could do it. But if you're like, I got 30 shots, dude, I might take the first couple just kind of a little bit cocky. Maybe I might throw it backwards because I'm like, I got 30. I want to call and have this position of like, I'm not swayed to go from the doctor to the patient thought process because I have so many people to call. Problem is, if you don't have enough leads, you start calling these families like you're the patient, like they've got something to offer you. And you lose the whole concept that the value you provide them far supersedes the value that you receive in the form of a commission. You don't want that to shift. How do you keep it from shifting? More families to call. So do you have enough leads? The second thing is activity. Is your activity high enough? I mean, you build skill through repetition, man, by just getting after it. So if you're not at the office at 7 a.m. and leaving at 9 p.m. and you don't have your appointments that you set out to accomplish booked, that's the issue. You got to get your activity up. Now, I'm not telling you what to do, but I'm just telling you, if you want your skill to build and get it, a lot of it comes from just experience, just getting after it, upping your level of activity. The third thing is mindset. Is your mindset right? Are you developing day in and day out? Are you at night getting back home from dialing or whatever and listening to some podcast and then asking yourself some questions? Man, how can I use this? Where did I miss this? How did I apply this? What must I do to make this change and implement this in my script? And are you recording yourself, listening to yourself back and your phone script? Are you going in the home? There's many times that at the end of the night, I spend those last couple hours, instead of watching Netflix or whatever, I would spend it downstairs in my home office, man, just listening to my recording of my in-home and saying, dude, I didn't know I sounded like that. Dude, I said that? I can't believe I said that. No wonder why the client responded like that. And that really kind of heightened my awareness of what I was doing and made me a lot more aware of really the reality of what I was doing, because what I thought was wasn't. And then I was watching podcasts so I could figure out, okay, I need to adjust this, tweak this, get better here. So the third thing, man, is mindset. Are you developing? Do you have a regimented schedule week in and week out where you've got time allotted to plug in, to sit there and to develop and get better at your skill? And the last thing is education. Are you consistently looking at ways to increase in different areas of the business? Advanced market sales. Final expense leads to index annuities. It leads to these other opportunities. Do you have time in your weekly schedule where you're educating yourself in annuities and these different things that final expense will lead you to? Referrals, getting better at referrals. Are you educating yourself in those arenas? Because if you are, man, profitability will soar. And so I wanted to kind of start there, foundationally speaking, because that does make the biggest difference, is that there. All right, the first thing that I want to address that kind of would mess me up in the beginning is if a client said, Paul, listen, in fact, I'll start here. I would deal with final expense. Now, this is going back prior to Family First Life. The leads that we started working at this practice company, they said Social Security benefits on them, right? And they didn't have any income requirement on them, nothing. So a lot of these families that I was calling, they were very in the dark on what I was even calling them for. Right? Now, I had to hold true to the concept that they either have life insurance, and if they do, I could get them a better product and plan. Even when I was so new, I didn't know what product or plan it would be. But I borrowed my confidence from all these people that had been before me that I knew would pick up the phone, the Slack channels that I can send a message to, the Facebook page group that I can send a message and say, hey, how do I best help this client? So my confidence was borrowed from those that I could get the answer from, right? You've heard it before. You ain't got to be the man if you know the man. I knew men and women that could help me out. And so I borrowed my confidence in the beginning from them, right? And so when it comes to my belief was they either have it, and if they do, I can get a better plan. And if they don't, they desperately need this because this is the most important thing that anybody could ever get. Now, that was what I held on to. Now, because I held on to that, I didn't grab onto, man, this lead ain't any good. Man, they think it's free. Man, they think it's this. They think it's that. Because, by the way, they did. And there was a lot of validation I could find to support that wrong belief that would lead me to failure, which is this lead is this. Because they really didn't know what it was calling. But I had to hold on to what I needed to hold on to set myself up and tee myself up to be successful. Now, when I got in the client's house, a lot of times what I would get, and I could see this, was like, dude, like these people, that were living on just Social Security, they had figured out a way just to kind of survive their whole life. You know what I mean? Like, they've been saying they can't afford things forever. Like, they're on a fixed income. They've had different governmental programs, federal that have helped support them and get them to a level where they could just simply survive. So when I sat with these families, I understood that. So I wanted to preemptively handle that so I could take away what they've been holding on to that would keep them from me helping them and getting them a plan in place that would protect their family. So when I sat with them, I'd say, Bob and Mary, if I'm sitting with them, I'd say, Bob and Mary, listen, what I do is I field underwrite. And so completely different than a sales rep that works with just one carrier, or completely different than what you might see online or might see on a commercial or TV or what have you. And what I mean by it being different is most families I sit with Bob and Mary, they're on a very, very, very fixed budget, very fixed budget. And most of them are very discouraged because they understand. In fact, I had a client last week who said, Paul, you don't understand. Like, I can't sleep at night. Like, I know how important this is. I've lived my whole life with dignity. I don't want to die without it. I want to make sure my burial expenses are paid for. But they just can't find nothing that's going to fit their budget when it's $200 a month. And that's what they see out there. The good news is this. I filled underwrite, and I've been doing this quite a while. So I look at all the different state regulated programs, the different options. And as long as I've done this, I don't know if I can think of how many families, if any, that I've not been able to find a plan that fits their fixed budget that they can protect their family by. And my goal and desire, guys, is to be able to do the same thing for you. See what you first, so we can get you qualified, to make sure you can qualify for one of these programs, but to make sure that it's going to fit easily, each month in your fixed budget, because that's what I do day in and day out. And I've never yet not been able to do that. So what I'm doing is I'm giving them hope. I'm saying, hey, dude, listen to me. Let me unclog your ears, because until I do that, the whole time I'm communicating, what I realized before is that, dude, I could go through financial inventory, I could ask the right questions, but at the end of the day, dude, what I'd get is it'd say, dude, we just can't afford it. But now they've been trained that whole time. And because I didn't preemptively give them hope in a different narrative in this situation that as much as you've not been able to afford anything in your entire life, today we can find something. Today, you're not going to say what you've always been saying, because every client that I sit with in your situation is on a very fixed budget, and every single time, because I look at all the underwriting, all the programs, and I just filled underwriting, I'm not a captive sales rep, we can find a plan that's going to fit for you. And I say with almost excitement. And so now they're listening. They're like, wow, this is something that I can finally afford. So that's kind of how you preemptively handle, I can't afford this, right? And if you kind of get that at the back end and the end of it, which I don't think you'll get a whole lot if you're very good proactively, at the back end of it, to close it, I say, listen, Bob, Mary, I understand the budget being tight. And especially if it's two incomes, and I can say, Bob, if you pass away, we know, looking at the situation, what it's going to look like. And Bob, the reality is this: I've done this a long time, and I guess I'm so passionate about it because of what I've experienced and what I've been exposed to. But God, tomorrow might be the day. And I hope it's not, man. I hope, I'm rooting for you. I'm hoping you're 182 years old. I'm hoping you guys both die in the bed at the same time, like the Notebook movie. That's what I'm hoping for. And there's no loss of income you guys have to deal with. But Bob, every client I sit with, they're in the same situation as you. And every client I sit with says, man, if it's tight now, Paul, my worry is, what does it look like if I'm gone tomorrow? If my wife is waking, trying to shake me, and I don't come to? Because that happens every morning. It happens every day. And when that takes place, and she's dealing with the fact that forever my life is different, my relationship that was my number one in my life is now gone. But when I wake up in the morning, where I sit, where I eat, the conversation we have, where we eat, every bit of the day is different forever. And that's something that they're going to have to live with. They're going to have to get through. But now, how do you survive with $500 less a month? Because the lower Social Security is going to be gone. How do I pay the bills? How do I get by? And so, Bob, what every client tells me is this, man, it's not going to be easy because the budget is fixed. But it's one of those things that it's essential. The one thing that is certain is that it has to fit in, because if this doesn't fit in now, there's no shot for your spouse to be able to get by or survive when something happens. And so I'm sure you would agree, and I know with certainty, I'm 100% certain, this is something that we definitely need in place, and I think you agree with that. So grab your driver's license, see what you qualify. That's how you go to the close. You go back to a story, you bring back the emotion, you bring back the why, the purpose, you give them something that they can step into and emotionalize and feel it. They can see the spouse shaking. They can see that stuff playing out. They can see the logic. Also, not just the emotion, the logic of that money is now less. That money is now gone. That's a fact. That's logic. That's factual. And then the emotion of losing that person and what that's going to look like and feel like, that's how you help the client in that situation. All right. Now, let me give you another one. So client says, Paul, and this is very applicable, final expense, I got to talk to my kids, right? Maybe it's a single, and I get this a lot with a widowed, or a single, lady that's maybe 75 or whatever. I got to talk to my kids. And so the way I'd handle that is I say, listen, Mary, I definitely understand. In fact, I respect that. And I know for myself, me and my mom, we have a very similar relationship, and I really value that. Like she reaches out to me and talks to me about things, runs things by. I mean, I don't think she does everything. I do know that there's certain things that she's just like, I'm the mom, I know this is good for you, I'm going to do it. And I know that, but I do value that. I have the same thing with my mom as well. And let me ask you this, Mary, if when you talk to your kids, if they say that they don't want you to get this, because I know that the last thing a kid ever wants to think about is their mom dying. And so most of the response is knee jerk and like, don't worry about it. Don't think. They want to just discount that thought. They don't even want to. They don't want to think about it. If they said no, would your caring of having this in place still supersede that? And would you still get it? What would you do if they said no? Would you still get this in place for them, or would you not? Now, if she says, oh, I would still get it, I'd say, perfect, Mary. Well, listen, it sounds like you want to try to get qualified regardless, because it is that important to you. You just want them to be aware of it. My suggestion is make them aware of it once you actually get it, because right now we don't know if it will or won't. But grab your driver's license, see if you qualify, and you'll close it every 100% of the time, because they've overcome their own objection. Like, I'm going to get it anyways, right? And by the way, just to kind of give the psychology behind when I said, I value that, I really appreciate it. Me and my mom are the same way. I'm relating to him. I'm not combative. I'm saying I agree. That's awesome. And then I also throw in there intentionally, but sometimes I know my mom, she'll make her own choices without running it by me if she knows like, hey, this is just good for you and I don't care. And but most of the time, so I throw that in there to let her know like this might be the same situation that's applicable for you, just like it is my mom, because I've connected and now she's seen herself and their dynamic in my story, and now she's going to be moved by that opening and then that option that I give her. So if she says, but no, if they say no, I'm not going to get it. And I say, okay, well, Mary, if they say no, like, what do you think they'd be saying no to? Like the budget or qualifying? Like, or would it be because of the budget? I'm sorry, would it be because of the budget or because of they just don't think it's that important? Now, the reason I ask that is because they're not there. So whatever she says is her true objection, because the real objection is, I don't want to talk to my kids. It's a smokescreen, right? So why do you want to talk to them? Well, if they say, no, I'm not going to get it, is it because of budget or because they don't think it's that important? Well, no, Paul, it's probably because of budget. Okay, got it. Well, let's take a look. The main thing is anything is better than nothing as long as that something's in place when you pass. And Mary, trust me, I've done this long enough, and the greatest love letter that I've seen kind of written is that check when I hand it to the kids, because I've done this a long time and there's a lot of checks I've handed to them. And even the kids that didn't want their parents to get it or mom to get it, they're like overwhelmed with just this like last bit of like, oh my gosh, she really cared. Right. And some of the times the kids didn't need it at all. Like they're really well off, but it was just, I cared enough to make sure that this was taken care of. And sometimes it's only 25% of the burial and final expenses, but they still cared enough to put it in place. And so let's look at an option that's going to be more sustainable, where they think it would be something affordable, which is just her. So I drop it down. Okay, this one's this premium. Now we can't make a decision today, Mary, because I don't know if it'll qualify. But Mary, if it were to qualify, do you think this would make a lot more sense, as far as the protection and what would be sustainable? Well, yeah, that actually looks good. Okay, perfect, Mary. Let's see if we qualified. And then she don't even bring back the kids again, because it wasn't the kids. It was the fact that she couldn't afford it. She just used the kids as a way to kind of pass that on to them, right? And so that's kind of how you would overcome that, right? Is the same thing, relating, agreeing, and just giving opportunities for them to kind of have a path out, to save face, so to speak, and move forward. So last thing is this, guys. Assumptiveness is crucial. Like, remember, when it comes to closing, I don't care if it's final expense, mortgage protection, anything. Like, you want to build why, the urgency and the why is crucial. Like how important this is for them. Like, man, they got to see it. They got to take something that's not tangible. They can't feel and grab life insurance, but you want to take what's not tangible, make it as tangible as possible for them, right? Where it's like palpable, like they can feel it, right? They can see it. So you do that through stories to increase the why, right? You create urgency by really addressing the known, which is you might not come home tomorrow. Tomorrow's not promised. That's the urgency behind it, right? And the last thing is you have high level of assumptiveness. Like, you don't ask like, do you want to start now? You're very assumptive, because it's like, that's the way you should be. Like if I'm the doctor and you're the patient, and I know that you need to take this vitamin or whatever to save your life because you're iron deficient, whatever it is, and that's going to kill you. I'm not like, you want to take it? You should take it. I say, hey, here it is. You need to take it this many days. I'm very assumptive, and I should be, and I need to be. You need to be, and you should be as well. When you're talking to these clients and you're going to the close, be assumptive. So, and then also end it with certainty. Regardless of what objection or where I'm at when I'm going back to the close, I have certainty, right? If it's, Bob, Mary, listen, I can't convince you're going to want to make this premium payment. I can't convince you're going to enjoy that. But you can't convince me that your family, your spouse is not the most important thing to you. I can see the way you look at it. In fact, I'm certain, I'm 100% positive that this being in place trumps anything else that's coming out of the budget, because this shows the value and the love that you have for your family. And I can see that. And so what we're going to do is we're going to see if we get you qualified, because it does make sense. I know you agree with that. Grab your driver's license. I'm assumptive and I'm certain, right? I'm assumptive and I'm certain. And so the last thing I'll say as we wrap this thing up is the producers that do the best, they have this charisma about them. The charisma comes from connecting with people. I'm connecting because I'm listening to them and I care about them. I want to hear their story. I want to relate. I'm connecting when they're trying to be combative and push away. I'm still connecting because I'm finding a way to find something to relate to them with and then guide them from there. I'm connecting and I'm confident. Confidence is just purely how you feel about your ability, right? If you're brand new, man, like, dude, I was confident brand new because I knew people. Man, you know people. If I'm walking through a dark alley and it's just me, I'm kind of like a little sketched out depending on where I'm at. If I'm in Cleveland, dude, I've been there. Like, it ain't a good spot. Like, that might be my last day. I might get murdered. The odds of me getting murdered is higher than not. But if I'm with Navy SEALs, man, I might instigate something because it's like, dude, I ain't got to even know. I don't even got to fight. I got to throw a punch. Dude, I'm with the fully armed. That's how you are, man. You're fully. You'll eventually learn how to fight. You'll eventually learn all this stuff. But in the meantime, be confident, borrow the confidence from those around you, borrow the confidence from your regimen, your habits, your disciplines to put the activity in, and then to put in the podcast and the calls and the training, to plug in the work spots, to do all these things so you can continue to tweak and adjust and get better on the massive action that you're taking. So guys, I hope this helps make it a massive week. Go out there and sell more, serve more, do more, work more, and let's take advantage of the opportunity that's in your hands. God bless you guys. Take care. Bye-bye.